So this is a short introduction into the company financial statements. So the published set of financial statements for a company will comprise of a statement of financial position, a statement of changes in equity, and a statement of profit or loss. Chapter 29 of your textbook will also follow through with these ideas. So the key differences between a sole trader's accounts and limited company's accounts. There are a few differences between the format and content of sole trader's accounts and the published financial statements of a limited company, and the key differences are given below. So firstly, capital and retained earnings. So capital introduced by shareholders is classified separately in the statement of financial position. It's split between the nominal value and share premium, as you saw with the previous section in your notes, and the nominal value is defined by law. The premium is any extra money received by the company when the shares were first issued. Retained earnings consists of brought forward accumulated retained profits, retained earnings, plus the net profit for the year, less any dividends that have been paid. The movement on retained earnings is reported in a statement of changes in equity. You also then have dividends. So dividends for limited companies are the equivalent of drawings for a sole trader, and again they are reported in the statement of changes in equity. Taxation gives us another difference with the sole trader's accounts. So tax doesn't appear in sole trader's statement of profit and loss. However, the limited company pays their own income tax, corporation tax, capital gains tax, etc., and this will be charged to the statement of profit and loss. The tax will not be paid until after the year end, and so the charge for the year will be a liability at the year end. And the closing liability is an estimate, and any under or overestimate is reversed out through the following year's statement of profit or loss. Cost of sales and the other expenses can be reported in two ways. The most common way is the function of expenditure method. This is where we group together expenses under the main headings cost of sales, distribution cost, and administrative expenses. Some manufacturing companies will use the nature of expenditure method, and this will itemise out expenditure according to its nature, so depreciation, wages, costs, etc. Non-current assets such as buildings, machinery, vehicles are analysed in a note to the accounts, and only the total carrying amount will appear in the statement of financial position, unlike statements for the sole trader where all of the non-current assets will be listed on the face of the statement. Notes and workings. So the notes are printed and published as part of the financial statements. Their contents are normally specified by an accounting standard. Workings are confidential and they will not be published. The contents of a company's financial statements will consist of a statement of financial position and the notes, statement of profit and loss and any other comprehensive income and notes, a statement of changes in equity, a statement of cash flows and notes, accounting policies notes, and comparative figures. The main sources of the regulations are the Companies Act 2006 and the accounting standards. IAS 1, which looks at the presentation of financial statements, is the main source for the required formats and disclosures of the published statement of profit and loss and other comprehensive income, the statement of financial position, and the statement of change in equity. IAS 7 provides guidance with regard to the statement of cash flows, and this will be covered as part of your second year financial reporting module. So the next couple of pages have examples of the formats of the financial statements. So this one is a statement of financial position. So as you can see, there's some detail in, but perhaps not as much as you would expect to find on a statement of financial position for a sole trader. So down the page, looking at the statement of profit and loss and other comprehensive income. This is probably where you'll notice the main difference between a company's published accounts and sole traders. Notice that we don't just list all of the expenses. Cost of sales is given as one figure rather than broken down. And this is kind of the usual format that we have for published accounts. It gives adequate information without giving too much detail. And then the final statement that we're going to look at as part of this module is the statement of changes in equity. And what it's looking at is all the gains and losses for a particular period in time, including anything that doesn't actually go through the statement of profit and loss. And what we are doing effectively is analysing the equity section between one statement of financial position and the year-end statement of financial position. So whatever headings you have in the equity section on the statement of financial position, you will have as headings in the various different columns on the statement of changes in equity. So in your next session in class with your lecturer, we'll actually work through the question PATAR Limited and use it to draw up the financial statements in terms of a statement of financial position, statement of profit and loss, and also a statement of changes in equity. And we'll also introduce you to the format of the main exam question that you'll face in May, and that is a published financial statements question.